Hello and welcome back to our channel. In today's video, we'll be discussing preferred stock and how it differs from common stock. If you're new to investing, understanding the differences between these two types of stocks can help you make more informed investment decisions. So let's get started. Preferred stock is a type of stock that represents ownership in a company, just like common stock. However, it has different characteristics and features. Preferred stock is often referred to as a hybrid security because it has features of both stocks and bonds. Preferred stock typically pays a fixed dividend, which is a set amount that the company agrees to pay to investors on a regular basis. This fixed dividend is typically higher than the dividend paid on common stock. In addition, if a company goes bankrupt or is liquidated, preferred stockholders have priority over common stockholders in receiving their share of the company's assets. Unlike common stock, preferred stock does not typically carry voting rights, which means that preferred stockholders do not have the same say in company decisions as common stockholders. However, some types of preferred stock may have limited voting rights, depending on the terms of the stock. How does preferred stock differ from common stock? Common stock is the most common type of stock that investors buy. It represents ownership in a company and typically carries voting rights, which means that common stockholders have a say in the company's decisions. Common stockholders are also entitled to receive a portion of the company's profits in the form of dividends, although the dividend is not fixed and may vary depending on the company's financial performance. In terms of priority in receiving assets in the event of bankruptcy or liquidation, common stockholders have lower priority than preferred stockholders. This means that if a company goes bankrupt or is liquidated, common stockholders may not receive any compensation for their investment until after preferred stockholders have received their share. When deciding whether to invest in preferred stock or common stock, it's important to consider your investment goals and risk tolerance. Preferred stock may be a good option for investors who are looking for a steady stream of income and are willing to accept lower potential returns, while common stock may be a better option for investors who are willing to take on more risk in exchange for higher potential returns. That's all for today's video. Thank you for watching, and please don't forget to like and subscribe to our channel for more content.